Hey guys, welcome to the Stock Sale Flyer. In this video, I'm going to talk about PayPal stock, which is a stock that seems like everybody's been talking about lately. I'm going to give you some of my thoughts about it, as well as my valuation, where I tell you what I think it's worth, and also look at the technicals a little bit on this one. So this is one that was down 2.64% today, closed at $61.24 a share. This happened, at least it seems like, because the company's chief financial officer, Jamie Miller, warned of slowing growth in its branded checkout business in the fourth quarter. So she was speaking at UBS's Global Tech and AI conference, and she stated that branded checkout growth will be at least a couple of points slower in the fourth quarter compared to the third quarter. This is just more negative sentiment on a stock that's already been beaten down. There's been a lot of talk about competition in the space. Between just the constant negative sentiment and some changes in the company, the stock has been selling off for quite a while, but it's kind of become a favorite one to talk about among value investors. You can kind of understand why as revenue continues to grow. And they continue to buy back a lot of stock in the company. You've seen total shares outstanding just continue to decline and get bought back. You've got a company about 12% return on invested capital on a 10-year median return basis. Still has great margins. These are annual numbers. Gross margin has declined, but on the other hand, you're seeing, at least for the 2024 here, you had an operating margin of about 18%, which was actually really solid compared to some of the history. So the company's been focused on profitable growth, and I really think that this is still a really solid business that is priced like it's in decline. And I just, when you look at the fundamentals, when you look at the continued growth in revenue, and the way that they're returning capital to shareholders, which we'll talk about more here in a minute, I just don't see how the fundamentals are still in line with the stock price. I think there's a detachment there, and that can create opportunity. I did cover this stock last year on the channel, and the stock, I don't think it's really. I actually think it might be lower than it was then. But this is one where it might take some time for the thesis to play out. So, what are some things that I do like still about it, other than what we've covered already, or building on what we've covered already? They've got this strong capital return program, about $6 billion expected in share repurchase. And then they also initiated a dividend in that. I'm not sure if they're saying the about 6 billion includes both, but they did buy back, I think it was 1.5 billion in this last quarter. And, if they're buying back $6 billion of stock or even close to that, you're talking about a company with a market cap of only about 58.5 billion right now. So you're talking about a significant portion of the market cap being repurchased. And we've seen, these companies that buy back a lot of stock, that can really pay off in the long run for shareholders, as long as, growth doesn't go off a complete cliff. Now, that said, this one isn't a company that is growing double digits every year, but I do think there's some growth drivers we'll talk about here in a minute, where we could see the growth at least stay solid, at least mid-single digit growth, along with this capital return strategy that they have going. This could, I think, really pay off as we go forward. What are some other things I like? Buy now, pay later. Total payment volume growth was over 20%. This is quarter three year over year growth rate here. So we have solid growth in buy now, pay later. They're rewarding customers. They're doing this 5% cash back offer on pay later purchases in the US for the holiday season. Why do I like this? One of the things that Robinhood did that really helped them grow was they gave people a reason to use their service. And um, I'm seeing PayPal give people reasons to use their products as well. At times they're doing these sorts of cash back rewards and things that give people a reason to use their account. I think that could be good. Now, am I projecting Robinhood style growth here? No, but it's something I think is a positive for the company, and something I like that they're doing. Also executing capital light here. So externalizing a portion of US buy now, pay later receivables to Blue Owl Capital. Why is that good for PayPal? Because they don't have all the credit risk of all these buy now, pay later transactions. So if people don't pay back what they borrow, it won't hurt PayPal as much if they're externalizing a portion of that buy now, pay later what they've allowed people to borrow with their buy now, pay later programs. 20% third quarter Venmo revenue growth as well. This is excluding interest on customer balances. This is third quarter year-over-year growth. So Venmo growing revenue really solidly. Buy now, pay later growing really solidly. And then there's these are almost like what I would consider almost like call options on the stock. So launching PayPal World, piloting a PayPal World, now piloting PayPal World transactions. So adding more global payment partners, basically connecting, doing cross-border payments. I could see that, being sort of an easier, like a lot of people they talk about, how crypto can help with this. Well, this is sometimes, sending money cross borders can be a pain point, and PayPal, some people, call it Pain Pal here, because of what the stock's done in terms of its price over the last few years. But PayPal could help with that, with this PayPal World product that they've gotten going. Agentic commerce, partnering with ChatGPT and Perplexity and allowing you to use PayPal to buy things when you are using AI. This is one that I really like a lot, is the ads business that they're trying to get going, because PayPal has a ton of data. The ads business just has a lot of room to grow, I think. And so I think that this is one that I think a lot of people are sort of underselling right now, that I think could really benefit the business. And then, they're involved in crypto and stable coins as well. So these are some things that I see as potentially driving revenue growth into the future that could, if these things work out, even help them to exceed some of the targets that I'm going to spell out here in just a second. So let's take a look at the valuation. So I went with 4.81% revenue growth in fiscal year 25, 6.1% the year after, and then I did 6%, 6%, 5%, 5%, 5%, and 4%, 3%, 3% down to fiscal year 2034. So tapering down the revenue growth over time. Again, if some of these things that I talked about, like PayPal World and the ads business, work out well, some of these numbers could end up being better than they are here. And then I have 13.65% net income margin as my assumption. I adjusted free cash flow for stock-based compensation and tried to bring forward some estimates into the future on that, going with 115.39% free cash flow to net income number here. And again, going with stock-based comp adjusted numbers, and then 115% going forward from there. Here are the numbers for my weighted average cost of capital, if you want to take a look at those. I've got a 2.5% perpetual growth rate. So after 2034, growing at 2.5% in perpetuity. I went with the shares outstanding from the last 10K because I didn't want to. So this is something, after thinking about it, I've started going with the ones from the last 10K, because if they're repurchasing, I don't want to sort of double dip on those cash flows from the current fiscal year. And I get a fair value here of $73.63 a share. Closed today at $61.24 a share. It's December 3rd, 2025, while I'm filming this video. I also have here some assumptions based on different PE ratios out into the future. So let's say, like right now, it's trading only at about 12 times trailing earnings. But if we go out to 2029, let's say we get a little bit of multiple expansion, we go to 15 times earnings, and they buy back at these rates. So I took the Q3 10Q shares outstanding, said let's say they buy back 2% more in quarter four, which they could do more than that. And then I think I was pretty conservative with these buyback estimates. So I had 6% buyback rate in 26, and then 4%, 4%, 4%. So after fiscal year 2029, with the number of shares outstanding I have here, if P of 15 with this net income number, you're talking $112.03. If it trades at a 17.5, $130.70. You can see out into 2034 what I also had for numbers out here, the number of shares out, the buyback rate, all of that, if you want to take a look at that in more detail. But long story short, I think this thing could double or more in 5 years. I think it's undervalued now. I don't think that it's a value trap because of the way that they're returning capital to shareholders, the way they're still growing revenue, the way they're launching new products. I think that there's a lot of opportunity here with this one. Yes, there are some risks with competition, but I think that overall it presents a really good risk reward opportunity in the market. Let's take a look at the technicals a little bit. So here you can see this is a weekly chart. PayPal had a bottom out in October. And it bottomed at $50.25 a share. So if you draw your fib retracement from that to the top from December, the local top from December of $93.66. You can see that the 786 retracement, it's gone below it a few times here, but it has ultimately gotten back above that each time. Now, we just went below that again back in November here. If you go to the daily chart, we can see this in a little more detail. And something I think is really interesting is the day after it went below it, we had a candle here, a green candle here that was 1 cent away from being a complete bullish engulfing candle for that red candle that dropped below that Fibonacci level the day before. And then we were in this uptrend here, little indecision in the market here. And then again, kind of sold off today. Basically, the thought is because of those comments. It seems like it was because of those comments that the CFO made when speaking today. So it'd be interesting to see, does this level hold up? Is this just a temporary sort of sell off and it's going to recover going forward, or do we have more downside to go? This is a long-term play for me. Again, I bought leaps that are all the way out to 2028 and have shares as well. I have more in shares than I do in the leaps, but I have a good amount of both because at least for me, a good amount, because I do think the risk reward here is really solid. One thing I'll point out, if you draw a line here, I do worry that this is looking kind of like a neckline a little bit, where if this breaks down, it could go a lot lower, but I think we got so much valuation support here. I really don't know if this is going to break down a whole lot. If it gets back down to these levels, I just have to believe that at some point this thing is just going to be, it already is a very cheap stock, I think, for what the fundamentals are saying. They've got the support of the buybacks going, so they're going to be continuing to support the stock price to some degree with buybacks, although it hasn't really worked to this point to cause it to durably go up. I just have to think that the downside here, there's much more upside potential than downside potential. So while this does kind of look like a head and shoulders a little bit, and this does look kind of a little bit ugly valuation wise, I just have to think that I have to think that at some point there's just going to be a ton of support, and this is ultimately gonna trend in the right direction. But it might take some positive things from some positive sentiment being pushed from management. It might take some time, but they're continuing to return capital to shareholders. They're growing revenue. They're launching new products. There's a lot I still like about this one. It's one that might take some time to play out, but I do own it, and I don't see any reason to get rid of the shares or the leaps that I have at this time. So I like it. I don't think it's a value trap. So if you found this video helpful or informative at all, or you enjoyed the discussion, please click the like button. Consider subscribing. Consider clicking the bell to get the notifications, and also follow me over on X. I'm always over there talking about what's going on in markets. I often post what I'm doing in terms of things I'm buying or selling. So if you are interested in following what I'm doing, go follow me over there as well. Hope that was helpful. Hope you enjoyed. Thank you, and take care.